Okay, folks, good morning and welcome to Swing Trading today. And it is June the 19th. It is game day as well. Federal Reserve announcement comes out today, 2 p.m. Eastern Standard Time. What will the chairman say? Well, it doesn't really matter, does it? Because I believe that after this rally that we've seen in this market, it will not be enough. When you take a look at the higher level view of this market, the S&P 500 on a monthly chart, it should scare the heck out of you. We had a huge rally in the market yesterday based upon the fact that the president was going to have a meeting with President Xi over at the G20 meeting next week. Big deal. I'm having dinner with my wife tonight. Maybe the market should go up another 100 points. They are jawboning this market higher, and what they don't want to talk about is the fact that this market broke down. This is a monthly chart of the S&P 500. We broke down back in October of 2018. There's a saying that tops in the market are a process and bottoms are an event. The process is unfolding, and you may be saying, Bob, we put in a new higher high on the S&P 500 relative to the prior high back in September. And that's a fair point. But when you go back to October of 2007, we had put in a new high relative to the September high of 2000. Yet we still rolled over. We couldn't hold our mud. Now, when do you know it's all over for this market? You'll know when it's all over for the market if and when we break down below the 2700 level on the S&P 500. It will be all over. There's going to be a ton of money to be made in this market. But in all probability, if we break that 2,700 mark, the money is going to be made to the short side. So please keep cash on the sideline. Now, the looming rate cut by the Federal Reserve in all probability will not be enough. Now, what else should concern you about this market on this chart? Simply take a look at the RSI. We have been putting in lower highs and lower lows since we peaked out in January of 18. Also, when you take a look at the stochastics, we have also been putting in lower highs and lower lows since February of 2018. So RSI peaked out in terms of positive momentum back in January of 18. Folks, that was 18 months ago. We peaked out on stochastics around the same time. But nobody's talking about this. Remember, tops are a process, bottoms are an event. The only positive that I will add here is that Ultimate Oscillator is breaking out on a monthly basis. Let's watch and see how we close out the month. We may be looking good so far this month in terms of candlestick price action, having reversed off the lower band of support. But the month isn't over yet. And there's going to be a reaction, negative or positive, between today and Friday. Let's see which direction this market goes. When you take a look at the bond market, we are already at lows not seen since September of 2017, and they haven't even cut rates yet. So the question then becomes, is the bond market signaling economic weakness, or is it forecasting a cut in rates and possibly a return to quantitative easing? I think it's a mixture of both, and rate cuts just won't do it. I think they're going to have to turn on the printing presses yet again to keep rates from rising, because we can't even stand a yield between 2.5% and 3% on this market. Think about that. Think about how weak this economy is when we can't have 2.5% to 3% yields on the 10-year yield without the stock market falling apart. And in Washington, the stock market is the economy. And that's a horrible way to think about managing your economy. But unfortunately, these are the times that we live in. We live in times of the government propping up banks and propping up corporations so they could buy back their own stock so they could stay in business. Half of these companies that are out there, especially in the retail sector, shouldn't even be around any longer. They're zombie companies, yet they are being propped up. This next downturn is going to be a bear. Pardon the pun. Let's get to the pre-market activity. All right, so let's kick things off where we left off. We just talked about yields on a very high level view. Now we're going to talk about the price action on the 10-year Treasury note futures. When the Treasury note futures rise, as they have been, yields decline. Now, ahead of the Fed meeting, I want to take a look at the price action to identify what's going on here. And you can see already on a 4-hour basis, yields are rising. Why? I thought the Federal Reserve was going to cut rates, or they're going to forecast a cut in rates. Why are rates rising? And the 10-year Treasury bond rolling over on a 4-hour basis. Granted, this is an intraday chart, but this is not insignificant, the fact that we are rolling over here. Let's go take a look at the S&P 500. We're about flat on the morning. As I mentioned yesterday morning, we would probably see a strong day yesterday, which we did as we broke out above this upper band of resistance. We got a retest, and it was off to the races. And I mentioned the retest yesterday morning as being very bullish, at least in the short term. Now what we're doing overnight is that we're bull flagging out. The bias remains to the upside, despite the fact that we have a little bit of weakness in the pre-market. Let's go to the NASDAQ. The NASDAQ never did retest this breakout point yesterday. We are in a tight trading range. Again, the bias remains to the upside. In fact, we are up slightly this morning on the NASDAQ. Members, I went over our strategy for trading this market pre and post Federal Reserve announcement on Market Wrap last night. Go check it out. Let's take a look at the U.S. dollar. The dollar has been consolidating since Monday. We are still trading above the 97 handle on the Dixie. But I will point out that we're seeing declining RSI, but we are in a trading range, so you got to give it a little bit of room here. Now, one of the reasons why the dollar remains so strong is that you have Mario Draghi, the ECB chairman, who came out yesterday yet again talking about how they may have to go back and keep the printing presses going over in the EU. And what's the purpose of that happening prior to the Fed chair here in the United States coming out with his announcement less than 24 hours after Draghi spoke? It's a currency war. They want to make sure that the world knows that the EU is far more dovish than the United States, so that way the euro stays weak so they can export to the United States. Because if the dollar weakens up, which is what they want to do to increase exports, that means European goods coming into the States become all that more expensive. So basically, the EU is having a passive-aggressive trade war, basically an unannounced trade war with the United States, and they're doing battle with currencies. More on that is to come, especially if we get a dovish Fed announcement and you see dollar strength. Because if you see dollar strength, it means that it's simply not enough. And that the Europeans have the narrative on their side, meaning they're winning the propaganda war in terms of who's going to devalue their currency the quickest, the United States or the EU. Let's go take a look at gold. Longer term, folks, backing out the volatility that we will definitely see here on gold and silver, we remain very, very bullish. Now, we do have on this 4-hour chart a possible double top on gold. It could be just that buyers are waiting to see what happens today. I think that any pullback is to be bought. Why? It's because even if they come out with a dovish statement today and gold pulls back, and that's a tell, really, right? Gold should rally, but gold has already rallied. So it may be time for a pause. And what gold buyers will be looking for is a signal by the markets or by the Federal Reserve that they will go back to the printing presses and start up a new round of quantitative easing. and that will totally annihilate the US dollar. And you will see gold surge to 1,400 in a heartbeat. So right now, all we want to do with gold is sit, watch, and wait. We are up big with the gold miners. In terms of silver, which we are long, and we're looking to add more, we are consolidating here. We have our third sequential lower high on a 4-hour chart. I'm looking to add more here using the USLV, but I'm not ready quite yet. Leaving off with Bitcoin, of which we are long, and we may just be booking profits on. The announcement from Facebook yesterday was a bit concerning. They have a lot of big banking partnerships, payment processing partnerships on their side already. And I don't know of many for Bitcoin. So I'm concerned here. So far in 2019, we're up well over 100% on Bitcoin. And we're probably going to make those profits real sometime this week. So we'll be watching. At current, though, we bull flagged out overnight or yesterday into the overnight session, and we broke out. So we'll watch it. I don't like the fact that we have RSI, which is putting in lower highs. That's a bit of a concern here on Bitcoin. Members, more to come on when we pull the trigger if we do decide to sell our Bitcoin. So stay tuned. And that is it for this morning, folks. Everybody have a profitable trading day, and try not to trade the knee-jerk reaction, please, to the Fed announcement. It's usually wrong. Remember, this market is driven by algorithms, and they want to sucker you in using emotion or the fear of missing out to get you to buy stocks or to get you to panic by dumping stocks and hoping that you'll go running in and selling your shares, and all of a sudden, literally 10 minutes later, you're sitting out of your positions and the markets are up yet again. Don't let them take parking space up in your head, please. Trade the charts, not the story. Be well.